The Global Energy Leaders Podcast, episode 77.
Welcome to the Global Energy Leaders Podcast, powered by R Squared Global.
Welcome to another edition of the Global Energy Leaders Podcast. As always, I'm your host, Ryan Ray, and today we have on Ellen Wald again, and we're talking about shale oil in the U.S. and can it survive? There's a great article by Ellen we'll link to in the show notes from Forbes, and you can check it out, and that's what we're discussing. Which leads me to my question of the day. Do you think that shale oil companies in the U.S. are in trouble? Can they actually survive in this low-price environment? Would love to hear your thoughts, Ryan at globalenergymedia.com. And be sure to pre-order Ellen's book, which we will link to in the show notes as well. Without further ado, here's my conversation with Ellen Wald. Well, Ellen, last time you came on the show, I think the internet basically shut down with folks listening to your interview. It just went crazy. I've never seen numbers. Well, I shouldn't say never. We've only had one or two other guests that have done those kind of numbers, and so it's just really an honor to have you to come back on the show. Thank you so much for being here today.
I am really excited to be back and to talk about all sorts of interesting things today.
Yeah, you come back a little bit controversial, if I do say so myself. You're basically calling out the shale oil industry, and I don't want to say you're putting it in the casket and burying it, but that kind of seems to be where you're going. What's going on here?
So I am saying that it looks like we might be looking at, or at least what the end of the shale oil revolution would look like. And we're seeing a very interesting kind of confluence of forces beginning to converge. And I think part of the reason we maybe didn't see this earlier was because we didn't have all the data. But now that we've gone through basically, a year, almost, 2 years of this tumultuous kind of oil roller coaster, I like to call it, we've got a lot more data about shale oil companies and how they are reacting to lower oil prices. And I think that's told us a lot of interesting things. And one of them may actually be, some sinister kinds of outlooks. So I can go on and give you kind of the short rundown of that argument. But basically, what I'm seeing happening is that shale oil is caught in what I'm going to call the growth vortex. And this is not unique to shale oil. In fact, I see it a lot in Silicon Valley tech companies that they start up and their investors want to see growth. They want to see more growth, and they keep giving them money as long as they see growth. But where are the profits? And profits, in a sense, don't even matter when you're in this growth vortex. But at some point, investors want to see a company that makes profits. And this is, I think, where the shale oil industry is kind of caught now. And we now have the data to kind of take a look at that and see, where are these profits? Can these companies actually make a profit off of shale oil? And one of the things we were told, at least when oil prices really started to drop, was shale oil companies, they're responding, they're dynamic, they are using new technologies to decrease costs, they're being smarter about where they're drilling, and all of this is going to keep the shale revolution going, that they can make profits at lower prices. Well, one of the things that we're seeing now is that that's not the whole story. In fact, that may not even necessarily be true. And one of the ways we can see this is if you look at the break-even prices for some of the most major shale oil companies, and if you kind of average them out, and you can then, if you take the spot price of WTI at the end of each quarter, and if you kind of graph them in line, but you graph the spot price about 9 months before the end of the quarter, because oftentimes these companies will hedge their oil sales. And you can see that actually the break-even prices drop in line with the price of oil, which is a really interesting phenomenon. And that tells you that, first of all, a lot of these companies, while they have cut their costs, are still not making a profit. In fact, only really one major shale oil company has consistently shown to be able to make a slight profit. That's our friend over at Continental Resources, Harold Hamm.
Oh, Harold,
And
huh?
yeah, from my estimation, Harold is at least of the major shale oil companies that I was looking at. Harold Hamm is the only one who has shown an ability to actually make a profit at these lower oil prices. On the worst offender I've seen is actually Parsley Energy, which has really, really high break-even costs regardless. But when you average them all out, you can see that the break-even prices have dropped along with the price of oil. And if you think about it, it actually makes a lot of sense because you have service costs, and shale oil is a very service-heavy industry, like as opposed to, say, an offshore platform that doesn't necessarily require a ton of people to keep it going. It's a service-heavy industry, and when the price of oil dropped, the service companies had to drop their prices because no one would hire them at higher costs. So the service costs drop kind of in line with the price that the oil companies are selling their oil at, and that leads you to believe that, in fact, if oil prices were to rise, the service costs may also go up, and so it's not clear whether the drops in break-even price that we saw will be sustained. If, say, oil just shot up to like $60 or $70 a barrel, you might see break-even prices also climb, perhaps not quite that much, but climb in line with that. And that tells me that shale oil may never be seriously profitable. I don't like to say never because you really never know what's going to happen, and that's
Right.
true in the oil industry. But it might not be nearly as profitable as we thought it could be.
Okay, so you've laid out a pretty substantial argument there, and I'm gonna pick a few things. I'm gonna give you a little bit of pushback on. So the first thing is you pointed out is that the break-even price fell as the price fell, and I remember when the price started falling in 2014. Folks were saying, well, the break-even price is this, the break-even price is that, and I just remember sitting back and going, okay, well, if you just take out the rate reduction, because that's obviously part of it. But the other thing I think that gets lost, and I would love to see how much analysts actually observe this part of the trend, is working in the industry when oil's at $100 a barrel, and anybody in the profession will tell you this, when it's $100 a barrel, cost is no option. Now, that doesn't just mean the vendor price. It also means planning and how many times a company will pay for one service to be done. And so especially in a planning phase, that you may pay to have something done 3 or 4 times, and you know that you will never need it to be done that many times. But you say, you know what, we're going to have something done 3, 4, 5 times, and then we're going to pick the best one, and we'll go from there. So the rate obviously is involved. So if the rate, let's just say for that service is $100 an hour, but then you have it done 5 times, where at $30, $40, $50 oil, you know that you won't be able to afford that, so you only have it done 1, maybe 2 times if you absolutely have to. And so it's not just the rate reduction that you see where vendors will lower the price. It's also how they look at how they spend their money in excess. And so I would push back. The first thing I'd say is obviously, yeah, the rates have come down, and they need to stay down, which is why I think the market needs to be stabilized. I'm not a big proponent of let the price really skyrocket, because I think what you're talking about there would come back into play. But also I would say that, you know what, how these companies actually operate on day-to-day basis on their projects looks completely different than it does when oil's at $100 a barrel. And when it's at 50, they're a lot more cautious on how they're going to roll out their projects and how things are going to be done. And so you can't actually, I don't think you actually can measure that unless you took all the vendors and said, well, how much of extra work did you do when it was $100 a barrel? Do you see where I'm going there?
Oh, yeah, absolutely. And I think that is something that we'll have to see. Like I said, this is something that is an ongoing process. We're going to have to see where it goes. But if oil suddenly did skyrocket, I mean, I don't see it doing that, but like I said, you never know. If it did suddenly skyrocket, who's to say that the companies would maintain these efficiency gains?
Right.
Particularly if vendors didn't jack up their prices quite as much to the level where they used to be. They might say, oh, we've got, plenty of money now. But then the question is, right now, they're being sustained by an infusion of investment from Wall Street, basically. And so they're, like I said, they're in this growth vortex. As long as they show growth, Wall Street rewards them for that. So another interesting thing that I looked at was there were a couple companies in the most recent earnings reports that said, that showed less growth. That said they're going to have less growth. One of these was Sanchez Energy, I think, and almost immediately its stock price fell. So it was basically like rewarded for doing the right thing with a plunging stock price. So for the company, cutting back was probably a good idea. But Wall Street looked at that and said, "Oh, no more growth. We're pulling out." So part of it is this problem that it's stuck in this growth vortex. And the question is really, will this ever end? Will Wall Street begin to say, we don't just want to see growth, we really want to see profits even at these low numbers? So are they going to start pulling their funding from shale companies, start pulling these investments, particularly from the ones that are the most unprofitable? Or are we just going to see a continuation of the growth vortex? I think that we are still stuck in the growth vortex, so the money is going to keep on coming, but we're seeing signs that people are beginning to realize this. And once you start reading about it in the Wall Street Journal, that means that it's already being talked about, or already has been talked about in amongst the bankers and on Wall Street. And so I think that's something to look for, particularly if oil prices start to go down. We want to look at, are these Wall Street investors going to keep funneling money as long as they see growth, or are they going to start to say, we want to see profits and pull funding from the most unprofitable companies?
Well, a couple things there. One, you mentioned Harold Hamm earlier, and I saw today or yesterday, I can't remember what it was, that he's saying that they are getting out of the business of taking loans. Basically, they're going to go cash-only type operating system. I don't know if that's immediately or when that's supposed to come into play, but I think part of the issue that shale companies face is if they are publicly traded, they are so heavily scrutinized. And I don't think, I saw like Pioneer stock fall the other day. And, if you bought Pioneer stock at 160, you may never get, it may never see that again because it just died in the same day. I felt bad for those employees who hired on it at $1.60. But I'm wondering, if you sit back and you look, one of the things that keeps the shale, you call it the growth vortex, if you say, one of the problems is these companies, because they have revolving credit lines, they've got to go drill, they've got to pay these interest notes. And I think that still mindset is large in part from, even if you go back to the first big boom with natural gas, companies got these huge credit lines, they had access to it, and then that fell away. Well, natural gas has never seen those days again. Oil now had its boom, and we probably won't ever see. I'm with you. I don't think we're ever going to see those kind of days again, barring something crazy happening. So I'm thinking that what's going to happen with these shale companies is over the next 3, 5, 7 years is they're going to get out of the business of big revolving credit lines, which will mean they can plan their futures out a lot differently than they do now because there's not pressure from Wall Street. Obviously, they'll have the earnings reports, which will be there, but they won't have these debt services that they have to keep up.
I completely agree with you. And I think that that's also like a classic boom bust situation that we're seeing here. And I completely agree with you. And I think some of them won't be able to make it and their assets will get bought. Because remember, the shale oil isn't going anywhere. It's going to be in the ground and someone will develop it at some point. So, it's not actually going anywhere, whether the company that owns the assets, goes bankrupt or sells them. So I think you're completely right. And that would be a much healthier perspective for the industry. They wouldn't rely constantly on, I need to pump enough oil, even though I'm technically not making a profit on it, but I got to keep selling it so that I can make payroll this month. Mm-hmm. I mean, that's the mindset. And once they start to transition away from that mindset to the kind of mindset that the larger oil companies, have in terms of looking 5, 10, 15, 20, even 30 years down the line at overall growth, I think you won't see quite the boom economy, but overall we'll be able to at least see if the industry can be sustainable. And I'm not saying the industry can't be sustainable. I am, however, raising the question of whether it can, particularly in this kind of market right now.
Right. And I think one other thing is just to kind of follow up on that. I think it's Cimarex, who's now operating on cash on hand and cash flow only, and their second quarter numbers looked really good. And so you might be starting to see companies. Whereas Pioneer, they took the beating, and really Pioneer took a beating because they had more natural gas than they thought they did. That seems to be they have 30 wells that are kind of off the pace, but really it's about their oil to gas ratio is a little bit off from what the analysts thought, and so it's going to be interesting to see how those companies they respond in the long term, because I think that the oil mentality for so long, and this predates the shale revolution, has been, hey, you can go strike it rich, and I just don't think that for the next foreseeable future, if ever again, there's a lot of money to be made, but not like it was historically, and so we're kind of past that phase, and so the industry needs to mature into a 2.0 or a 3.0 where it looks at things differently, and in that kind of wildcatter mentality, it may be gone for the most part, and that's okay, because as you pointed out a minute ago, when you talked about the vendor prices going up and down compared to the oil and gas prices, as someone in the business, what we want to see is we want to see stable oil prices, because that allows us to understand what we can actually charge our clients. Because if oil goes down to 30 and it shoots up to 40, what does that mean? We can raise our rates comparably, or does it mean that we're still competing for market space because the market's really hadn't adjusted? If it shoots up to 70 in a month, what does that mean? And so it really creates a lot of problems. And then if you do adjust your rates to if it pops up to 70 and you increase your rates and you hire people based upon this new rate, and it goes back down to 50, well, now you as a vendor, you're in trouble because you got people that you're paying based upon a $70 rate as well. So I think that's kind of been lost in the mainstream is that we really just want stability in the market for probably the next. I don't see it changing for any reason, but it's what we want anyways.
I think you're exactly right. And stability is, I think, what everyone would like. In fact, that's what, if you look at what the Saudi oil minister and past Saudi oil ministers have said, we want a stable oil market with a price that's good for the consumers and good for the producers. But there is a section of people out there who don't want a stable oil market. And that's oil traders who trade, daily, hourly, or, all the time, and they make money off the market moving. So if it's a stable oil price, they're not making money. And I think that one of the reasons why we do see such instability in the oil market overall is the growth of these, oil traders, or sometimes I call them speculators because they almost are like speculators, and this is their business. And so they, can move the oil market up or down based on, just on their trades or on their, the latest, EIA numbers that they see coming out, and they'll move the market based on that in ways that are kind of detrimental to the oil industry as a whole.
Yeah, and it's frustrating because you'll see an EIA number comes out on a Wednesday, and you're like, okay, maybe it's a bigger draw than what I was expecting, but okay, it's a draw, and then all of a sudden the market reacts, and you're like, I don't think it's worth that kind of reaction. I mean, I don't know, should the price have changed that much?
Exactly. I don't like to, predict oil prices in general, but sometimes people ask me, oh, well, why did it move like that? And sometimes the answer is just, it's August and people are bored.
Absolutely. No, absolutely. We could do a whole show, I think, on just how the traders, there was a group of traders, I don't remember if it was last year or year before last, that they bought a bunch of oil and they sent it out on a tanker. They bought it at a certain price and they shipped it out and just set it at sea for a little while. And then they brought it back to port and sold it for, a gazillion dollars or something like that. And so there's a lot of things that go on in the business that, you just don't realize until you sit back and kind of look at some of the interesting parts of it.
We should talk to some commodities traders sometimes because they have some really funny stories. Like I once read this article about, I think it was a reporter who said, I'm going to actually try to buy a barrel of oil. And she kind of went through the process of what does it actually mean to buy a barrel of oil, to trade it or whatnot, and where's this barrel going? But sometimes they mess up and they end up getting the actual product delivered to them. What are you going to do with a lot of corn or, it's a very interesting business, but I think right now we're definitely seeing it affect oil a lot. And the former Saudi oil minister, Ali al-Naimi, he really was constantly kind of digging at these people and raging at them and saying, well, the speculators, we're doing this and this in OPEC and whatever, and the speculators are responsible for these wild swings. And he was really not happy with the situation.
Yeah, there's some groups, some organizations and stuff that if you are an operator or if you have so much oil that you can get access to certain groups. And I've almost bought oil just to say, well, I mean, I'm not technically a producer, but I do have so much oil to my name just to get access to some of these, I don't want to say elite, but some of these select groups that are in the business. But I haven't been able to pull it off because I didn't know what to do with it if it got to my house. So.
Exactly, because you can't actually really use a barrel of crude oil.
Right. It's not going to do much for me but sit in the garage, and the wife probably wouldn't like that. So before I let you go, give us a book update and tell us where you're at with the book. It's coming out in 2018, I believe. And how's the process coming, and when can we look for it?
Yeah, it's the due date is coming up soon for my manuscript, so I'm putting kind of the final touches on the product. Then it goes to my editor, and after that, I will incorporate their comments, and then I'll get copy edited, and all sorts of photographs are going in. We're going to have a photo insert. And right now, the publication date is scheduled for April 2018. That might change, but if it does, I'll definitely update everyone. And where you can pre-order the book. I think it's up on Amazon right now. So if you want to look it up, Saudi Inc. You can look it up. I don't know if it's available for pre-order, but if it is, go on ahead and pre-order it. But it's definitely coming along.
Well, that's a good deal. That's exciting. I like watching your Twitter updates when you talk about it, and it is on Amazon, and we will link to that in the show notes. You could. It's related. It's the number one new release in Islamic banking and finance category. So you've got that to your name.
Wow, that is exciting.
We're breaking news here on the Global Energy Leaders podcast. You can order it on Kindle and hardcover, and so we'll link to that so folks can pick it up. And the beautiful thing about Amazon is the price can change, and you can get good deals just by pre-ordering stuff sometimes. So we'll link to that, and anywhere else. Obviously, you're a contributor at Forbes, and you're active on Twitter. We'll link to all that in the show notes. Do you have any other events or things coming up next month or two you want to mention?
Right now, I don't. I also write weekly on investing.com, usually about oil prices and what's going on in the market. So you can also check me out there.
Absolutely, and I need to add you on there. I follow a few folks on investing.com, but I don't think I have you on my list, and so I'll definitely do that, and we'll link to that in the show notes as well. Well, Ellen, it was great as always to talk to you, and we will link to this article from Forbes, which is titled "This is what the end of Shale would look like," and they can the readers can go and check it out for themselves.
Thank you. I had a wonderful time.
The Global Energy Leaders podcast is produced by Michael Sims and Chris Prine. Chris Prine also serves as editor for the Global Energy Leaders podcast. Until next time, keep climbing.
Thanks for listening to the Global Energy Leaders podcast, powered by R Squared Global.